Well, good evening, all. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for Friday, the 9th of February, 2024. You know, there's nothing you can say other than melt up, and that's what you have. Anything with the word AI is on fire and running to the moon. How high is high? I don't think anybody can tell you what that is. What you want to see eventually is a stall. It's not healthy that it just keeps running. You've carried the S&P up now dramatically up to the 5,000 level. You've got back to the 18,000 level in the NASDAQ. You haven't been there in a couple of years, 3 years almost? So you've really carried the market, and you've surprised the market. I don't know of any analyst in October that was saying this market was going to go straight up for the next 3 or 4 months. And do you know what the second weakest month of the year is? The second weakest month. February. This is weak. Now, it's only the 9th, admittedly, but come on. So what happens when something like this takes place is people start buying the outliers. It's called broadening. And they'll move around and they look at the broadening effect. What can I get into? What hasn't moved yet? What's on the fringes of that AI movement that might make things happen? Now, we're still getting earnings. They'll be all through this coming week. You got quite a few of them. I think Cisco's even in that, Caterpillar, John Deere. There's a lot of the companies that are coming out yet. I'm going to focus this week on something we haven't done, cadence, and you'll see it in just a moment here. You still are putting pressure on bonds and notes. Market's still looking to me bad. NVIDIA, another runner, up another $25 today. I can't believe that I told clients to get into this December 4th, and that was at 460, 458, and that it's here. I find this hard to believe, okay? So it's just the way it is and what we were doing there. And we called it a concept trade because I had to explain that you break all your rules and you buy the Bollinger Band bottom, not the top. And I went through it in detail, and I said, there is a time where you break a rule, and I gave the reasons, and luckily, I didn't sit still. I don't know what the car makers are going to do. They're going to be a little bit of everywhere. Tesla, to me, is now a car maker. So you may disagree with me, but I think you have to take them out of the tech space per se. And if you have to have a company in the Mag 7, I don't know who they'll add, but somebody will replace them, is my guess. Now, cadence. They engage in the design and the development of integrated circuits and electronic devices. Duh, AI. So it catches the ride with it. That is the point that I'm showing you. And it just came alive, in all honesty. This is a weekly chart. So you've just turned higher lows, higher highs in the chart. The setup has been here. You're over the 18-week average. So the obvious resistance to me is where the upper Bollinger Band is, and you got over it 2 weeks ago, fell back, got over it now. I'm looking for another pullback. On breaks, this market looks interesting to me. It's developed the bullish embedded reading. So if you're looking for things to change, maybe this is one of them that you might want to consider there. That's up to you. Microsoft, you know it's my favorite. It has not given me one chance to put you in on a break of any reasonable part. You had to get back in November. Otherwise, it's not really giving you an opportunity. I wish it had. I talked it, didn't execute on it. Now, I am really nervous about the regional banks, unlike, I guess, everybody else. I think I'm in the camp with Paul Tudor Jones. If you watch an interview, he thinks there's a tsunami of commercial debt coming at the market that the market can't absorb. I write about my point of view this week. There's one of the security firms that watches these buildings in 10 of the big cities. They show who's going in the offices. Obviously, you put your key card or whatever in and it goes. And we are seeing that numbers have really come back from the depths of the pandemic when they were running at about 15%. But you can't make money at 53%. And that's where they're at. This is a high since the pandemic, 53%. So you own a commercial space. You got half your building not being used. Your rates are going to go up. your property value is down. You got to go to the bank. You've got to redo it. The bank doesn't want it, but they also don't want to throw good money after bad, because the way society's going, I don't know that any of us are going back to the offices the way they are. I'm not. I'm sharing that with you. I am not, okay? I will not go sit in an office again, 9 to 5, or in our hours, they were really from 6 in the morning until, for me, 5 at night in the office. Then I would come home and do my work. I like it so much better working out of an office at home. So I'm one of those that is not going to be doing that again, all right? This is just the way of life, and I actually work longer hours, but they're easier. If I want to take a nap, I can take a nap. If I want to refresh, I can. If I want to just walk away from it, I can, and then I'm right back at work. I'm way more productive. But I'm watching what's going on. And if this market can't hold this 47.15 area, you're opening the door for the 37. Momentum's already turning down. I'm telling you, I think you're at a spot that's very important. I haven't had a sell signal come yet there, but I'm worried. In China, I tell you, don't believe the Chinese, all right? Their economy is in serious trouble. The government's in serious trouble. They have kicked Western companies out via the pandemic and their attitudes there. This nonsense where you can't sell stock, and then they come in with their security regulator and they buy the state companies, and the market goes up, and you're supposed to think that the market has gotten stable. Come on, this is a big world. Their stock market is not in good shape. I think it is a short sale. I think on rallies, I am telling my clients we'll be looking at that. XLI, still very bullish, okay, the industrial sector. I don't get it, but the chart action is bullish. I'm not seeing, every time I see a Fed regional district come out for manufacturing, it's weak. Now, eventually it's got to turn, I would think, but it hasn't. Yet this market acts as though U.S. industry is on fire. In XLE, this is still bearish. Now, be careful with energy of all types. Venezuela is threatening to take over Guyana's oil, and that is not good. They've moved soldiers there now. There's 700,000 barrels a day roughly being pumped already. If that comes off the market, be careful as to what goes on in the energy sector. As for the dollar, well, unlike the futures, this market is a bear market rally. I know it sounds crazy, but you're under the 18-week average. You're underneath the 100. It's a rally in a market that has downside bias, and it has had a bounce. In the gold, this is a key area for the gold market, right here, right now. Gold comes alive if you can get back over 194.36, and it gets in big trouble if you get under 185.45 on a weekly basis. So I'd be watching that. Netflix has gotten to a point where, to me, it looks a bit rich on the chart. Got to the upper band, it's getting divergence up here, it's just sort of drifting. Yes, you have the embedded reading, but I teach you never buy an upper Bollinger Band. So I think the pros have taken some money off the table. And in Tesla, you know that I think the stock has got big problems and it can go down. You do realize where the stock was and where it's at right now. Recently, it was 400. So you have that, but it was higher than that. So this company's got some problems. It'll be a sign of stability if you can clear not this week's high, but last week's high, the first sign of that. But there's a lot of resistance, and I think a lot of willing short sellers in the 220 to 225 area in this. In Uber, be careful. You're getting up to the upper Bollinger Band with an embedded reading. Last time you did this, you had a correction, so you're getting to the zone where I'm looking for that to happen. If you can see, you're back down on the weekly charts into the support area of the uranium of the Camco. And on the daily chart, you're down to the Bollinger Bands. You could see you were setting up for a correction. You had run into the resistance. It's so important that you learn to look at weekly charts with daily charts. I do in the mornings in my morning subscriber video, not the free one you see here, but the one for my paid subscribers. And so often, a story is told by looking at the two of them together. Last in Google, all right? This is not doing well, okay? It's not participating. They haven't hit their cylinders. They haven't figured out the AI part. They haven't figured out the advertising, how to get this going. The market's overbought. It's hit its Bollinger Band. You had a big reversal last week, and it's sort of stalled in there for the moment. Want to remind you, We offer so much information for you to take advantage of. We write about all this, we talk about it, we give you technical analysis, we give concept ideas in the marketplace. These are just some of the free offerings. All you do is go to iraepstein.com, free offers. You can move your cursor to the top. There'll be a cursor there as well. Give it a click. I'm Ira. Enjoy the Super Bowl. Whoever wins, I just want a great game out of it. Best luck to both teams, and I'll see you Monday.